See you.
Good morning, everybody. Did that sound enthusiastic enough? Let me get to my X account so I can tweet this here.
Is it the show with the bald boys today?
I know. I know.
The bald boys
Yeah,
bonanza, whatever you want to
The
call
follicle show.
it.
Just shows we've earned our
And
presses.
we can tell we're all old because we all got our glasses with our little bands to hold them on, and our reading glasses. And
it's funny because my brother had one of these for years, and I was always like, "Dude, what are you, Mister Rogers? Whatever." And he's like, "No, I'll change your life." And by the way, if anyone has glasses who's
Flex.
watching this who does not have one of these, you're ridiculous because it just you know where your glasses are all the time. So
yeah,
well,
otherwise
let's
we find them in a little case, pulling them out of my pocket all the time. Every time I get a text, I have to pull out my glasses and read it.
yeah, and you drop them, and it's like, all right, well, we've already added value to all the viewers, so like we're already helping them with their lives. So, um, well, first of all, happy birthday to my mom who's 88 today. So
Awesome.
there you
Wow!
go,
Happy
isn't
birthday.
it?
Congrats.
Yeah. So she doesn't watch, and she does just fine in the market, being indexed and not having to
You won't that get
trade
around?
around positions. So every investor is different. So do your own work. This is just what we're doing. So for Bob Morris and Kevin Bakes Baker, well, good morning. Now let's actually get started. So we're going to talk first to Bob about oil and gas. And speaking of, Bob's for the last couple months really focused on investing in oil and gas, but as a long-term investor, which is fascinating, right? Because most people are jumping in when the war starts or trading around it, day trading. But you've kept us kind of honest on core positions. Has anything changed in the last few days now that peace has almost broken out? A
Yeah.
resolution has broken out. Is there something we should be thinking about doing?
Well, I did move a little bit of my EOG into EQT and EXE. So I'm not reducing my position in CNQ or Chevron, um, just because I like those names, and they've held up very well relative to the oil price. And I think there's still good value in those names based on the 12 to 18 month strip where oil prices are. So I'm not reducing my positions in those. But EOG, I did move a little bit of my position, a little over a quarter of my EOG position in the EQT and EXC. And the reason being is that those two names are almost pure natural gas names that have sort of been taken down in the whole sell off of energy when natural gas is held in here. Natural gas prices never ran up like oil prices. So as we're looking at natural gas prices, they're holding in here above $3. And these names have sort of been thrown out. There's the baby that's been thrown out with the bathwater that I think are very cheap here. And with where natural gas is and where we see the long term fundamentals for natural gas, which we talked about ad nauseum, given the long term growth in AI data centers and LNG and just U.S. industrial production, we think these are very good long term holdings at very good levels down here where they are today. Expand Energy at over a 52-week low, EQT not quite there, but still, these are very good names where, granted, if oil continues to get hit here and the energy sector continues to sell off a little bit, they will probably continue to get hit perhaps a little bit in that wave of sell off in oil. But given the hit that they've taken with natural gas prices holding in here and natural gas prices not getting hit while oil's gotten hit. I think if you're putting new money to work, that's where I would look at in energy. And like I said, I moved a little bit of my oilier position in EOG over to EXE and EQT. Those two names are down too, but not as much as the oilier names. So besides buying some SpaceX right on the IPO, that's the only thing I've been doing here.
All right. So SpaceX, just want to be part of the party.
I just want to buy that on the momentum here. We'll see where it takes it, but I'm already up over 30% here, so we'll ride it while it's running here.
Yeah, it's pretty amazing. And then coming out, he came out with a little bit of sneaky guidance of what some of the revenue might look like. So he knows what he's doing, at least on building a momentum. So we'll keep an
I
eye
think it's
on that.
I think it's more of a cult stock right now, so we'll ride it while it is.
Mm. So Kevin, what when you look at the names that Bob just mentioned, the EXE and the EQT, and sort of moving a little bit from oil to natural gas, I mean, is there anything in the charts that you say, well, look, I would keep this running, or that's either contrary or confirms what he's saying?
Yeah, it's obviously not my cup of tea. I don't spend much time below the 200-day moving average. But Bob has forgotten more about this space than I'll ever know, so I defer to him. I do kind of like the fading oil and picking off gas. Gas seems inevitable to me. I think I've been saying that for a while, but it just seems like the demand for power, natural gas is just a no brainer in my opinion to feed the AI boom. So these are not my charts at all. But I think we're at reasonable support levels. I don't see a hell of a lot of downside. And next thing you know, it's going to be September. We're going to be talking about winter, and we'll have maybe a higher strip at that point in time. But I defer to Bob on this.
Yeah,
All right.
I mean, look, I don't know what your interpretation of the chart. Obviously, they've kind of had some down momentum here with the sell off in energy, but again, the valuation wise, and given where we see the long term strip on natural gas, I'd be accumulating. I'd be much more of a buyer than a seller. And I think you're right, based. I think there's limited downside to both of those names.
Yeah, I mean his EQT, which is kind of I would say a blue chip in this space. I don't know if you agree with that, but I think I would.
Yeah.
And
Yes.
it's sitting at the support that was back in 24, and natural gas at 3. Is natural gas going to 2? I don't think you think so. So I think this is okay. The dividend is what, Bob, 4 something?
On EQT, I think it's below 2%. Well, maybe it's bumped up a little
Okay,
bit here, but
okay.
yeah.
But again,
Mm,
I like things above the 200-day, but I understand exactly what you're doing, giving your energy focus. And I'm just curious, what your the more I listen to podcasts, and frankly, podcasts that hate Trump, but it's like, oh, you call this a deal? This isn't a deal. And there's a lot of skepticism as to how this plays out. I don't know if what you're hearing from your sources, if maybe this
yeah.
drop down to the 80s in crude is too much too soon.
No, I'm glad you mentioned that because one of the reasons I'm not selling most of my oil names here, like CNQ, Chevron, and only pared back a little bit on EOG, is there's still a lot to be determined here. And we've got a 60-day MOU. We don't have a deal yet. You've got Iran, internally in their country, spinning it as a victory for them on their nuclear ambitions, basically. And as I've said all along, I think part of their strategy is just a stall strategy. And then now they've got 60 days to argue about really what are the details and the terms of everything they supposedly agreed to. And in the meantime, yes, Trump maybe bought himself a little bit of time with oil prices coming down here, but I still think part of their strategy is to stall, 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 and hope that politically the Trump administration runs into some roadblocks, whether it's domestically or on the international front. And certainly now the other Middle East countries are going to keep the pressure on to say, look, just we've got this far, keep it going, nail out an agreement, get this done. We don't want to go back to war, shooting missiles or having issues in the Strait of Hormuz anytime soon. And, as far as opening the Strait of Hormuz, it's going to take at least several weeks to get things back flowing somewhere close to normal. And, we're down to what, 7 million barrels a day, maybe flowing through the Strait of Hormuz when it was running, freely as it should. It was flowing about 20 million barrels a day through the Straits. So yes, oil prices have come down, but we've got a long ways to go to know that we've got really an ironclad deal here that's going to hold. And again, if it's a 60-day MOU, Iran's probably going to take it right down to the 60 a day to determine or nail down, if they are able to, the details of everything that is in the MOU. But it's going to continue to be this sort of tit for tat. And it's going to be, you know, yeah, we bought ourselves 60 days probably without any, fighting or, the war over supposedly. But, at the same time, apparently part of the agreement is that Israel withdraws from Lebanon. And there's a lot of things that could go wrong in the meantime. So we're watching it very carefully. And again, there's going to be some geopolitical premium in the oil price continuing forward from here, regardless. Yes, we had said several weeks ago that, the peace breaks out scenario was that oil would then probably go to $80 a barrel, and we're below $80 a barrel here. And, can we pull back to 75 or so? Yeah. But are we going back below 70? No, I don't believe that we are. You're going to have, at least for the next 60 days, a still healthy geopolitical premium in the oil price that I would peg at $10 to $15 a barrel relative to supply demand operating as it should if everything, were to get back to flowing at 20 million barrels a day through the strait and production everywhere back online. So, um, it's I think there's reason to be a little bit, well, more than a little bit cautious and skeptical as to how this all plays out and what sort of agreement we end up with.
Yeah, well, I think you've said it perfectly, which is they've not held to too many agreements. Trusting them, and they probably would say the same to us of trusting us, but trusting them has not been a great approach. But all right, so let's move on. Kevin, what did you want to talk about today? Because I had a couple things to talk about, but
Yeah, no,
I
and
know you want
I'll,
to talk
I'll
about
move it.
Citibank, Coinbase.
I'm moving along. No, this is COP. This is ConocoPhillips, and I did this because I knew Bob was going to be on. But this just caught my eye, and this is not what you want to see. And I think COP is also another uh, blue chip here, pure play oil and natural gas. But this is a series of lower highs and a series of lower lows. Now, of course, it tracks the price of the commodity. And oh, by the way, the relative strength line is doing the same down here, if you can see that. And so I just, my eye is struck by that, and that is not a pattern that I would be rushing into. And it just could it reverse? Yes, it could. But I think this is a bearish development, which perhaps fortifies that this deal might be, or the market's perception of this deal might be more firm than perhaps Bob and I just expressed in our views. But the market is saying that the commodities are coming down, and this series of lower highs and lower lows to me is cautionary for certainly the integrateds like ConocoPhillips, which is COP.
Yeah, Conoco, I don't own. I've never owned it. I sort of put their asset base a little bit second tier, so to speak, where I prefer Chevron, Exxon among the so-called integrateds. So it's not been among my favorite names, but it's not one that I own, not one that I would buy here. I'd rather, again, my preference on the integrated side is the Chevron and Exxon's.
Yeah, and I'm looking at the volume is picking up on the down days, which I also don't like. So this fortifies me a little bit to be a little bit cautionary on the commodity linked names. All right, next up, and I know this is Charlie isn't on the show, but Citigroup. We've been talking about Citigroup for a long, long time. Charlie was a buyer in the 40s. I'm pretty sure I have that right. He can correct me if I'm wrong. So down around here, and I have been saying for a long time.
I'm here, Bob. You're here.
I'm back.
I don't know where
Um,
Kevin is, but let's. I'm going to
Before we
continue while. Oh, there we go. There's Kevin.
And
there we
I've been talking to myself. Okay.
go.
You said you left it off that Charlie's had a great call on Citicorp and Citigroup, and you wanted to kind of update us there.
Yeah, thank you. And and this is a technical target, but it's based on this logic. You can see this line that I have here. This goes back to when it hit an air pocket back in 2008, 2009, the great financial crisis. That was 140. Those were previous lows that you see in the late 90s as well. And it's taken 17 years, but we've fought our way back up here. Charlie, God bless him, has been here in the 40s and 50s. I think he's got close to a triple in this, which is hard to do in uh, you know large scale banks. It trades at a discount, probably should. Doesn't have the return on equity profile of the others, but this is hitting new highs, and J.P. Morgan isn't. And so I think maybe they're getting paid a little bit more for whatever they earn for investment banking fees for SpaceX, etc. But I'm there's nothing wrong with this chart. The volume is receding a little. I just think it's going to be tougher to make big money from here, from what I see, and given the people that have market memory back at the 140 to 150 band. And so, it to me would be, something to watch for. It'd be a source of funds. I would look hard at portfolio Darwinism, and if you have better ideas, this might be a source. And I'll talk to Charlie at some point, and he'll discuss it online, I'm sure. Where maybe this is going to blast through 140, 150, and keep going. But this is a logical place for it to stall, given this chart here going back to the great financial crisis. So it's been a huge winner. Somewhere we're on record of saying this, that this was our area to target. And I hope our members have made a lot of money with it.
Sounds good. Yeah, it has been a great call. So nothing wrong with ringing the register every now and then. So
And
And JP Morgan
lastly,
and Bank of America are really outperforming it today. That's just one day, but yeah, it seems to be lagging the other big banks today.
well, yeah, but look at here's J.P. Morgan. It has hit a new high. Citigroup is hitting new highs. J.P. Morgan isn't, and Um, these are the leaders of the. I haven't really looked at this yet. These are the leaders of the SpaceX deal, close but no cigar to a new high. Morgan Stanley is hitting new highs, but Citigroup has clearly. I think it's gone from a turnaround story to an operational story, and just I want to give some flowers to Charlie. I think it's been a great call for I don't know 2 years.
Yeah, no, it's
all
been a
right,
great call.
I've got
only
one
need a
more.
couple of.
And this is five. And again, I wish I'll talk to Berna offline. And this has been another monster. This has been, I think, a triple for her. I'm just concerned that it had a good earnings report. Apparently, the guidance disappointed people, and you have the first close below the 200-day. So my discipline would be sell a third. I'm curious to see what she says, that maybe that the guidance is just them sandbagging, and going into the holiday season they crush it and they reverse this. But I'm just concerned that this is the first earnings report in a while that has disappointed people and has caused some technical weakness. So I'd want to be real sure that the next 2 quarters at least, and the guidance therein turns the sentiment around. But
Got
it's
it.
been a horse. I mean, she's it's been a triple, and she's killed it. But this concerns me. This recent action.
Mhm.
Yep, got it. All right. Well, I'm going to close out with two simple things. So first on Teledoc, just to revisit something that's we're up 35% in a very short period of time. So I don't know if either of you followed me in on this little small cap name, TDOC, now trading at 750. Um, this is one that I said is kind of a turnaround, not an easy turnaround either, because they have this telemedicine called BetterHelp that isn't doing very well. And so it seemed to kind of pick up off a bottom. I had met with the CEO a number of months ago at a conference, and he seemed reasonable. He seemed to be aware of the problems, because I think both of you know that one of the most frustrating things is you find a really cheap stock that you think could be a turnaround, and then you meet with management and you're like, oh, this is why they're faltering, because these are real dopes. The second frustrating thing is if you meet someone who's like pretty capable and they're just in a bad business, and then you go, well, you know what, this is cheap and this is going to take a while. And I kind of put this in that category. Sometimes those work out, sometimes they don't. So that's why I sized it. This is in a giant position. It's not a insignificant position, but it's not a giant position because we don't know how things are going to turn out. Well, so far the market seems to be liking this in a momentum, growth type market. This is pretty interesting that people are starting to pay attention to it. So I still like it. I haven't sold any. I'm going to keep it for now. I don't know. I wanted to ask though, what do you see in the chart, Kevin, that either tells me maybe I should be more cautious or less cautious?
No, I like this, and what I like here are these blue lines down here on the bottom. As you see here, these blue spikes. It's under accumulation. I think that's virtually for certain. This 803 high that you see here is echoed by the 805 high back at the beginning of the year. The 200-day looks, if you squint, it looks like it wants to turn up. It's flat right now. The 50-day is going to cross through the 200 to the upside. The relative strength has picked up since you started talking about it, and this is a base. And I believe bases are. I take bases a lot more seriously when I see this kind of up volume occurring, and I'll be really more excited when I see 803 plus close and on significant upside volume. So I think you have a winner here. I think it's confirmed at a close above 803, and then 977 becomes the next level you're looking at. And that doesn't sound like much, but as you're saying, you made 35% already, and I think this is still in the show me stage. And when you get above 803, I think it's the turn is in stage, and you have further upside to here to at least that $10 level.
All right.
Yeah, is there a catalyst you're looking for in this stock that we could watch for?
No, ideally a catalyst would be that they partner or sell off BetterHelp, but I don't think that's going to. Partnering maybe, but the selling it off, I just don't know who wants a declining telehealth business. If I were in private equity, I would, because I'd say this is something that who cares what the trend is right now if it's not a long-term trend. This is just a post-COVID work down of, okay, now people are going to see therapists in their office. But the other is being able to string together some not so disastrous quarters. I would say this last quarter was not good, but not a disaster. A couple quarters earlier kind of was a disaster. So, and that's why I wanted to assess, is he reasonable? Is he coming out when you meet with somebody and they say things like, yeah, this is not going to be easy. We need to fix the spending, the acquisition cost for new customers. They're transitioning from a all direct to consumer type business to an insurance covered business. Well, that's hard, right? You have to go to all different insurance providers. You have to negotiate rates. You have to then say to people, hey, come on in, via your insurance. And that was different from cash pay. We're cheap. And what they're finding is that the people who come in on insurance stay longer. So that's great. But you also take a little bit of a margin hit. So it's, to me, it's a transition. The core business is actually pretty good though. So I wish it were, I was going to say this at the start, but the best things to do is when you have, or one of the best things you can do as an investor is when you have a position that you're hoping goes down so you can buy more, you should probably just buy more. It's because if it's your number one position that you're hoping goes down, that tells you that, you know what, you just feel bad you didn't buy enough. And that's what I'm hoping for with this, is that there's something that's a negative drawdown that is not fundamentally changing my thesis. But so we'll see. The other one takes the other side of this, which is Maine, MANE, Veridermics. This is one I mentioned the other day. It's flat to, well, I mean, 3% in a week or two of a very big move. When the market dipped, it fell apart, and now that we're back to speculative, mode, people are kind of coming back to it. This is a hair growth company that's working on oral minoxidil. You may know minoxidil because something like 15, 20 years ago, it came out as an over-the-counter drug for hair loss. They're working on an oral version. You might ask, like, why did the multi-billion-dollar big drug company that came out with minoxidil not think of doing an oral? Well, the drug was originally an oral drug and caused some cardiac issues. And so that's why you don't have oral minoxidil. Now, oral minoxidil is used off-label for some telemedicines, like compounding pharmacies. And, that's not necessarily the winning case there, but they use it at a much lower dose. So this company is saying that they can use a higher dose because they came up with a proprietary gel matrix, which I've heard things like this before through the years in healthcare. You need to tell me fundamentally how you're changing it, entering and exiting the cell, to convince me that you're not just putting some old technology onto something and hoping to get it approved. Now, I did something this morning before we came on. Let's see if I can find this. So there was there's a thing called the FAERS database, FAERS, which is like adverse event for different drugs. And it's a self-reported thing. Doctors and patients can report. And, so it's not as though it's perfect from a scientific standpoint. But someone did a study, and they just, I'm going to summarize it because I said, hey, this was in the analytical cohort of 2012 to 2025. So they took all the reports for oral minoxidil and all the reports for topical minoxidil, and they compared the two. And so I said, explain this to me, as a simpleton. And it said, well, look, what this has come out and shown is that this is a smoke detector going off, not a fire. It's a clear safety signal. Okay, now why does that matter to me? If you're going for an over-the-counter drug, or if you're going for a prescription drug for hair loss, you have a much higher safety bar than you do for oncology. Makes sense, right? Someone who's dying of pancreatic cancer can have a much higher risk tolerance for whatever they're going to take versus hair loss. If a dozen people die from a hair loss drug, that's a tragedy. And I'm not saying that people, half a dozen people dying from a cancer drug isn't a tragedy, but it's hey, we've tried our best. So the bar for safety at the FDA for hair loss medicine is much higher. Will this drug get approved and then never get used because doctors are afraid of this potential cardiac issue? Maybe. I think that's the best scenario they can expect. But that's just my opinion. Who knows? Maybe it comes out as a clean label and everybody uses it, and the three of us a few years from now look completely different. Remember, the three of us are very biased for hair loss drugs. We want them to work. But I will say that my guess is that this is not something that makes it to market. And my view is the FDA, even though they seem to be in somewhat disarray now, will look at the cardiac risk and say, it's just simply not worth it. Now, that depends on the phase 3 studies, which they're going to be working on, and we'll see if there are any events or not. They said in their phase 2 that it was fairly clean. So, Kevin, what does the chart say?
How are
David,
you
my question
here?
is, if it's an oral minoxidil, how does it just make hair grow on your head? Why does it not stimulate hair growth everywhere?
Yeah, good question. That's they haven't answered that. So you end up probably growing hair, more places too. So
you may end up being able to join the circus. I don't know.
Yeah, I mean, or you're very ready for winter. So,
I'm sorry. Go ahead.
David, how are you positioned here? If you don't mind me asking, if at
you know, I'm
all.
short a little. Yeah, I'm short. I'm
Okay.
short a little. Again, I think everybody can. Two reasonable people can come to a different conclusion. I will say I was looking at their holders list this morning. Adage, which I've mentioned before, is among the smartest and best healthcare investors I've ever come across. Unlike John Paulson, who's the worst I've ever seen. We will say that they own the stock. So now they've owned stocks that have gone horribly too. Just because they're super smart and good in general doesn't end. Just like, in a way, like any one of us, we have winners and we have losers. Doesn't mean that we're horrible at something. It means that we might have gotten something wrong. So this one, I could be wrong. And if they get approved and it doesn't get used, the stock might be still higher, right? Because you have to see the execution.
You don't know that until months afterwards.
Yeah, and I mentioned this to a hedge fund friend of mine who said, yeah, he's going to get involved after they get approved. I said, I don't think it's ever going to get approved. He goes, well, we'll see. So that's another different approach, right? Just wait. So
one quick point, Adage, yes, they're holders, but they're probably holders at, from private rounds and in single digits, and here we are at 94. So, that's a different animal than saying they bought, even at the IPO at 17. So
I don't know people's lockups. I don't know where they bought it.
Yeah,
you see a name on a list. You have no idea if they've hedged it. I only mention that to give some balance to what I'm saying is that, this is my opinion of what I see for the historical precedence of this, and that risk isn't worth it for me. In fact, the risk tells me like, hey, and I don't believe individuals should short. So I'm only short a little bit because I think that, it's fun. It's a good intellectual exercise to do, but I won't be buying a new electric Ferrari on if this goes to zero. Well, maybe I would.
Yeah, and charts with binary events in biotech are not very helpful at all. If I had to make, and this is a very mild tilt, when you it looks to me that the expectations have become fairly lofty, and so anything that casts doubt on the data will probably be met with more downside hurt than upside pleasure, is my guess. But that's all it is, given the binary nature of this world.
All right. Does the chart tell you anything other than it's been up and to the right?
It tells me that people are leaning to the bullish side of the boat. That there's a lot of enthusiasm for these results, and they better deliver. And if there's any blemish in the data, I think this thing gets hurt. And I'm not saying that just because of where you're positioned. I'm just saying here's a big spike on big volume. Somebody got bulled up, and I think that the expectations are now pretty lofty, and they better deliver. And if they don't, then look out below.
Yep. All right. Well, there we go. It's 10:38. It's 6/16/26. So the 16th of June. Go to wallstreetbeats.com to get some of our behind the scenes chat, or go to passes.com/wallstreetbeats and enjoy the week. And Bob, you're up another 11% on SpaceX today. You should just go to the beach, kick up your heel.
Like you, I'm sitting here saying I should have bought more.
Exactly. That's always the case. Always the case. So, well, everybody, enjoy the week. Have a great one. Thanks again.